forward a few minutes while I just get set up before I start doing the BYOB, showing you the simplicity of this amazing strategy. I'm just trying to go live on Facebook. Oh, it says it's streaming live, but it's not showing me the live stream yet. So, there I am. Right, okay, so I need to just grab this link so I can pop it on the tool. No, I'm on a meeting, you have to wait. No, I've got an hour, mate. All right. Copy. Paste. Oh God, what have I done? I don't know if it's going to work. Let's just try. Copy. Right, I need to now get this into the Forex group. So let's paste that in there. If it's going really slow, so bear with me. Okay, paste that in there. That's that. Right, I need to get this into Discord. So I need to do it off my phone because I haven't got Discord up on my computer. So let's grab that off of there. Bear with. Oh, God. Copy. Discord. Paste. Right, that's on there. I need to then enable the waiting room so people can jump on. Okay, there we go. That's that one there. Good afternoon. Good afternoon.
Hello there.
Hello. Right, let's just get these in the groups. Financial Freedom Group. Just post that in there. Right. Everything is going so slow. I think my children are caning the internet this side, so I do apologise if it's all running particularly slow. All right, let's post that in there. Right, where else have I got to be? I've got to be in the Ninja group, which I mean, I've got to be in the free trial group, which I mean, I've posted in Discord. Oh, I've got to post in my group. Right, that one. Hello, everybody jumping on. Hello, hello. Thank you for joining today. Right. 2 more clicks and then I should be with you. She says, hoping and praying that this is all going to work. All right, that goes into that one. And then I think because it's in a public group, you can share on my personal line. Oh, we'll see. We'll see. All right, one more. Paste. Yes, post. Right. I'm everywhere I need to be, and there's people here, which is great. Is it going to work? No, spinning. Ah, there we go. We're off. Right. There we go. Right. So I'm just going to shut a few things down. So hopefully this will run a bit smoother. And then if I shut that down and I can't see then, people jumping on, it makes me nervous. Right. Let's give it. Right. Hello, everybody. How are we all today?
Well, pretty good.
Good, thanks.
Good, good. Has anybody had any pips yet this morning? Been trading?
Yeah, 3.2.
Ooh, 0.2 is very important. That's your spreads all sorted. Excellent. Right. So just so I know, what strategy are you all concentrating on most?
BYOB.
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 Oh,
Especially after listening to, what's his face?
oh, Lizzie.
Yes, yeah.
Trading, I know. Just goes to show you, doesn't it? I think we've all been on that same journey where we've come in we've kind of got really confused. Somebody just want to mute out. Mute Jeff out. Well, we've all been on that journey where we come into IM Academy and there's so many shiny objects, and you just think, oh, which one can I try today? And you go off to different strategies. You try this, you try that. You go onto your IMTV and you follow another educator, and you think, well, this one is now the best thing ever.
Yeah,
and I've done it myself.
That's what becomes confusing.
Yeah, it does. And you start to focus on one strategy and you think you've got that down, and you're having a really good winning streak, and then something else will come up and they'll say, no, this is the best thing ever. And then you'll go, well, let me just try that. And then you get confused because the strategy is slightly different from the one that you've been doing already. And maybe the stop losses are bigger or something like that. And it can really throw you out. And I think we've all been on that journey. And I think what's happened is everybody's done like a massive year-round loop where they've started off very basic. They've tried everything that's come up, and they've all gone back to what is very, very simple and what works, which is BYOB. And I've done the same. When I first looked at BYOB, I was like, oh yeah, I'll try that. And it was simple, but I thought I knew better. And I thought, oh no, I'm going to add this indicator and I'm going to add that, and I'm going to add all these wonderful shiny objects. And actually what it comes down to is I've stripped it all right back again, straight back to the BYOB, to just them three basic things. And it's like, well, that works. So why, if it's broke, don't fix it. Sort of. If it's not broke, don't fix it. So I think Les has kind of reiterated that on his interview, just saying that, it's a really, really good, simple strategy that works. So why not, let's just focus on that, focus on one thing and get good at that one thing. So let's have a look at it, shall we? For people that don't know what BYOB is, it stands for Be Your Own Bank. So I'm going to share my screen and we're going to take a look at it together. And it really is a very basic, simple strategy that anybody could learn very simply. And it works. So can you all see my trading view screen? Is that showing?
Yeah.
Yeah, good. Right. Okay. So just going to remove everything off here because I don't want to confuse you all. All right. So some of our indicators that we get given in our group. All right. BYOB. Only 15 minutes. Okay. So when you first join the Ninja team, you will be directed to your IM center where you will be going through your basics of trading. So you will learn what a pip is, what a lot size is, what support and resistance is, what a trend line is, what actually Forex is, the currency pairs, all that kind of real basic stuff that you will need to go through when you first start. So if you're looking at a chart for the very first time and you're confused by this simple chart, then please don't worry, because once you've gone through your IM Center and you've gone through your basics, this will all make perfect sense, believe me. And the aim of this particular session today is to literally strip it right back to basics, to show you the power of just learning 3 simple steps, okay, to make yourself profitable within the Forex markets. So what we give you then is we give you some training on BYOB, and we give you a checklist that you can literally print off, and it's literally you go down your checklist and you check off all these different things. And if all these things line up, then we take the trade, okay? It's as simple as that. So let's start with our checklist. Right, drink. Now, Forex markets are very much controlled by news events and banks and huge organizations, and anyone that's moving money around the world in a large sum will affect the way that these candles move. So before we even start to trade for the day, what we need to do is we need to go and check the news for that particular day. And we recommend a website called forexfactory.com, and it looks like this. When you come onto Forex Factory, if you go up to your timestamp and click on there and set this to your particular country and your time, save your settings, and then you go to calendar. Now, what this does is aimed to give Forex traders the best insights as to what is going to affect the news that day and what could affect the markets and what could affect your particular trade. So you find the day that we're on, so Tuesday the 5th of May, and this starts literally from midnight, okay? So it's bank holiday in Japan at the moment. So the Japanese yen is on bank holiday, which means that that particular pair could move very slowly, It could be very inactive today, so it's something to be aware of throughout the day. If you're not thinking it's moving very fast, it's because they're on bank holiday over there, okay? So that's something that you might not have known from watching, your news report. Right, at 5:30 this morning, when we was all asleep in the UK, the Australian dollar had 2 red flags. Now, if there is news that is red flagged, that means that we have a high impact on the way that the forex markets move. This will make a change to the way that you trade. So you need to be aware of red flags. Anything that is yellow is very minor news, so it won't affect things too much, but still be aware of it. Anything that's orange flagged will cause a little bit of volatility in the market, so you need to be aware of that. And what it does here is it gives you the time of day to expect these news events from coming up. Let me just, somebody's not muted. I've got some beautiful music in the background, which I'm just gonna, see if I can find who it is. Scanning down. Everybody, Henry, let's just mute Henry. There we go. Right. So what we do is we look at the news. So what I tend to do is before I start trading for the day, I grab something very, very technical, which will probably blow your mind because I don't want to blow your mind too much, but I get a Post-it note, right? Now this is modern technology in its finest, right? And I literally write on there, red flag news on so-and-so currency pair at what time, and I stick it to the front of my computer for the day. Because even when I've gone in and I've checked my news, yay, Christine's got a Post-it note. See, she's up with modern technology. They know the score, right? Even though I go in the morning and I check the news, something could happen. I completely forget about it, and I look at a trade and I completely forget that actually, the Great British Pound had an orange flag at 9:30, and I could have taken that trade. So if I stick it in front of me, it always reminds me to just go and flick my eyes down to that to have a little look before I get into a trade, okay? And I would say if there's anything that's red flagged, try to avoid trading it an hour before or an hour after, because it has an effect for a couple of hours around that news, okay? Also, not only check Forex Factory, but there is one that FX Choice do as well, which is another economic calendar, which is a little bit more, maybe a little bit more advanced. But for the basics, we're just going to check Forex Factory. Also, be aware of current affairs. So if you know that President Trump's going to have a meeting or something on television, or he's going to say something, then be aware around that time that something could change. Also, Trump could just tweet something and it could change the markets. He could just come out with some random comment. So just be aware of things like if there's any major news coming up in the major news itself. Also, what I've got, I don't know if you've got, depends what country you're in, but I actually have got a BBC News phone app, right, which literally you can set to the sort of news that you want to get. And I've set it to financial news. So I'll get like a little notification come through on my BBC News app to say, so-and-so has just announced, and it might not be on Forex Factory, but it might be something you need to be aware of as well. So always keep an eye on what's going on in the world, because at the end of the day, you are trading a currency that, the whole world is trading. It's not just you and your little box. It's everybody is involved in this now. So you need to be aware of what's going on in the world as well. But I'm not going to tell you to go and study news events or watch Bloomberg or anything like that. All you need to do is check your Forex Factory calendar, check your local news as well, and just be aware of what's going on, because it can affect things. Okay, so that's the first thing we need to do before we start trading for the day. So not too tricky at the moment. Okay, all you're looking for is some red flags. Right, the next thing we need to do is we need to go and get a trading signal from somewhere. So with IM Academy, when you join as a platinum customer, you will be given the harmonic scanner for free as part of that. And the harmonic scanner is an amazing piece of kit that will give you trade ideas, trade alerts, and it's really, really amazing. And $1 million traders use the harmonic scanner. Let me just go and show you it. This is the harmonic scanner. Let's just open it up. There we go. Okay, and what it does is it is an incredible piece of kit that searches the Forex markets for certain patterns. Now, Forex trading comes in patterns. The candles move in waves. They come in different levels and things like that. And the actual tool finds these patterns in the markets and gives you a heads up of what's about to happen. So if we just click on to, let's just look for another trader's way. Right, okay, so they also give you these patterns in different time forms. So you can look at 15-minute time zones, or our time zones. And what you tend to do is all these patterns get called out. So all New Zealand was called out. And this one has already made its move, but it actually hit stop loss on this one. So what it does is it tells you at a D point where to get in, and it will tell you to get to take profit 1, take profit 3, and it gives you stop losses, your entries, and all that sort of things. So this one came down, hit take profit 1, and you could have got out there, but it did retrace. It's come back down again. But that's not a very recent one, so let's have a look. This scan came in. Okay, so you would have got in here, your entry is here, and it tells you where your take profit 1, take profit 2, take profit 3 is, and your stop loss. But for each one of these scans that comes in, we recommend that you go and have a look at some criteria that matches with these as well. So don't worry about these too much. Don't look at this and think, oh my God, that's so confusing, because it really, really isn't. This is just telling you to go and look at CAD JPY, and it gives you everything you need to know, all the information. So that's the harmonic scanner, and it gives you trade ideas all the time, and it's really, really awesome. But what we tend to like to use for the BYOB strategy, which is the one we're going to be concentrating on today, is the vibrator tool. Here it is. Now, this is a little add-on to your IM Academy pack. I think it's an extra $15 a month, but it's so well worth it. Because the amount of trades it calls out all the time is amazing. Now, because I do BYOB on the 15-minute, I've unticked the daily charts, 4-hour charts, and I've unticked the hour charts. And what it does is it gives you trade ideas, and it tells you how long ago these trade ideas were called. And what this tool does is it looks for volume bursts within the market. So if a bank or an organization has put a lot of money into something or something like that, this will pick up on that, and it will tell you where the volume bursts are, and it will tell you whether to buy or sell. So look, these are all the pairs that get called out. So what we tend to do is we set our strategy to the BYOB, because that's the one we're going to be learning on, and it puts a few indicators on here for us. Now you can just trade off the vibrator. You can take, oh no, oh, it can, I've had this open for so long, it's kicked me off. Look, it's a bit rude, isn't it? Right, hang on a second. We had this trouble the other day. Kicked me off. Oh God. Bear with me a sec. It should remember my password. I don't know why it's not remembering it. Hang on a second. Oh, the joys of live TV. Right. Let me just, I didn't know if I changed my password or not. I might have done. No, it should still be the same. Right, okay. Come on, let me in. Right, okay, what I'm going to do, close that one down. Go back in. You should remember me. There we go. Right, we're back in. Okay, so I think that's what I have to do with that. If it kicks me out, I just go back and reload it again. It seems to work better than trying to log back in again. Right. Anyway, as I was saying, so this tool calls out trade ideas, and you can have a look at the different time frames as well on here. But this basically, the vibrator basically is TradingView, which is a free package you can download from the internet. Now, TradingView, you can go onto tradingview.com. Okay, look that up on Google, and you can join for a free account. You don't have to pay for TradingView, it's completely free. But I tend to use TradingView to mark up my charts. I find it a lot more user friendly. I find it easier to draw on. I find it easier to kind of monitor. So even though we get the trade alerts called out on the vibrator tool, I then take that alert with me, so all USD, and I will go and look at it on the TradingView like this. So all the pairs then are then in alphabetical order down the side. You can add those in manually, and then if you just press symbol, it just alphabeticalizes them all for all you OCD people out there. So all USD. It was called on the 15-minute chart. So let's have a little look at it. Right, it's this one here. So for our BYOB strategy, right, this is what we call a naked chart. There is no indicators on this chart whatsoever. It is literally the price down the side. Just move my box over to there. You've got the times here, which should correspond to the time of day that you're in. So 15:21 is the time it is in the UK, which corresponds to my time here. So you set that to your time, so you know exactly when the trade is. Now, each one of these lines, you've got red lines and green lines. I'm going to strip this right down to basics, guys. So I apologize if I'm, teaching you how to suck eggs here, but this is just for anybody that's looking at this for the first time. Now, red lines coming down, these are candles. Red means sell. Green that are going up is buy. So on this chart, you've got sell candles and buy candles. Now, when a candle has got a thick part and a little skinny wick, okay, this is the body of the candle. The thick bit is the body, the skinny bit is the wick. Now, when we are trading the BYOB, we go on to something called high Kanashi candles. There are different sorts of candles that you can use and you can trade with. But for our BYOB strategy, we do like to use the high Kanashi. And you can change the candle types in this little drop down here. So we're going for high Kanashi because they measure trends, okay? They're a trend measuring candle, and that's what we like to do for our BYOB because we like to see what the trend is, okay? Now, as you can see, these green ones, okay, they've got a lovely flat bottom and a sharp tall wick coming out the top. Now, when you get a wick, when you get this little skinny line coming out of a candle, that means that this particular candle is a little bit indecisive as to which way it wants to go. So it's come up, it probably came all the way up here, but it's dropped back down again and left us with this little skinny wick. That means that it will try to go up a bit further, but the sellers were kind of going, oh no, I'm not sure, I think we should get this turn now. And they brought it back down and left this little long wick. So this indecision has been left. The next candle formed, it's tried to push up, it's wicked back down again. And because we've had these two high long wicks here, the next candle is actually a sell, because this kind of tells us that even though this was in a buy-in situation, this has been coming up, these two wicks, because they're quite long, tall wicks, this is a really good indication that the sellers are going to take back control of this trade and bring it down. And that's what they did. Look, the sellers, the red candles have formed and are bringing this back down again. If you see candles like this with hardly any body and wicks, excuse me, really dry throat today, really dry wicks, this is called a doji candle. And you'll learn all about the different sorts of candles and the shapes and things like that. And you'll get used to looking out for these. Now, this is indecision. As you can see, these candle bodies are quite small. They're quite indecisive, and they've got wicks either side of them. So during this period here, this time, these candles were really indecisive, and they didn't know whether they wanted to go up, whether they didn't want to come down. In the end, they made a decision and they carried on up. So we try not to trade on these indecision candles, okay? We like to trade on big, strong candles like this one. So the first thing we look at them is we make sure that our high Kanashi candles, and we make sure we've got nice, strong bodied candles. Now, this candle that's forming here is a lovely, strong sell candle because it's got a flat top. So it wants to push down, okay? If it had a wick coming up, it wouldn't be pushing down very well. You'd get spiked if you tried to push that down. But when they've got a flat top, they're pushing down. This is a sell candle. When they've got a flat bottom like this, they're pushing up. It's going to push up because there's no wick to stop you from pushing that up now. So this is one thing we look at before we take a trade. If we're going to take this as a sell, we look at that to see if this has got a nice flat top, and it has, right? So that's one of the first things we look for on our BYOB. Now, let me just have a little drilling. We can't just trade off of that. We can't just trade off of candles, because you're not going to know when the next candle is going to form. You're not going to know which direction this whole trade is going in. And if you look at the side here, it does a little countdown to the next candle. Each one of these candles represents 15 minutes of time, because we're on the 15-minute time frame. If you drop down to the 5 minute, Each one of these represents 5 minutes of time that's happened. Okay, so if you want to really hone in on that precise entry, you could drop right down to even the 1 minute. Each one of these candles is 1 minute of time that's happened. If you trade off the 1 minute candles though, it's very fast. Okay, you don't get time to analyze properly because these move every minute. These will move. So 15 minutes is a nice safe zone where you've got 15 minutes to figure out what this candle's doing. Okay, and because we are scalp trading, which means we're going into the market, we're grabbing 10 pips and we're getting out. Okay, so we can look at the 15-minute chart and we can, you know, give ourselves a few minutes to have a good look at this first. Right, the next thing we're going to do is we're going to drop on an indicator. Now, if you go up to the indicators list, okay, and you search, we're going to search for an indicator called the stochastic, and it's a free indicator that is available in TradingView. There is a stochastic. Now, when you find that, if you click the star, it will save it in your favorites section, so you can always go straight to that. Now, this is stochastic. Now, as you can see, it's dropped this line on the bottom of our charts now. So not only have we got our Heikin-Ashi candles, we've now got something on here called the stochastic. This is setting up to be quite a nice little trade, everybody. So keep watching, right? So stochastic. Now, as you can see on this stochastic, you've got like a little range here. It goes from 20 to 80. If these lines come out of this purple zone, which is between 20 and 80, this is called the price being in the extreme. Now, this is what we want to look for before we take a trade. If the price is in the extreme, there's a good chance it's going to want to come back, okay? So this one here was up here, it was in the extreme, up here, and as you can see, it started to come back. And as you can see, the red sell candles are forming as it starts to come back. So what we look for on our stochastic is we look for price to be in the extreme before we take a notice of this trade. Now, as you can see on this little line, we've got a wiggly greeny blue line and a wiggly red line. Now, the red lines are the sellers. The green line are the buyers. Now, if the sellers are in control of a trade, they will be on top of this green line and they will be bringing it down, and there'll be a gap between the two. So as you can see with the candles, they brought it down. We had a little bit of indecision here where, look, the buyers tried to take it back. You see how the buyers crossed over the red here, but the sellers were like, no, 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 we're having this, we're taking this down. And they've crossed again. See, the red line is crossed over here, and that represents this movement here. See, they've brought it back down to the extreme down here. Now, as you can see from the candles, it was in the extreme down here and in the extreme down here. So then the buyers crossed over the red, and look, the buyers have brought it back. And as you can see, the buyers have crossed over and they're over the top of the red and they're bringing it up. So when this is in a nice strong up movement like this, the buyers are taking this up. But then we got to about here in the extreme and the sellers tried to take it back. So look, the sellers crossed over, tried to take it back, the buyers crossed back over, tried to take it back up again, and they've been a little bit of a battle up here. But I think finally the sellers are really back in control of this trade. The sellers, the red, has crossed over in the extreme and they are separating from the green and bringing it back down into this purple zone. And look, they've brought it back down here. Can you see that? So you've got stochastic was in the extreme, the sellers have crossed over, the red line is over the green line, and the candle's got a flat top. So that candle's now ready to push down. The stochastic is now coming down. Okay, so this is now setting up for a nice, so we just had a candle change, we just had 15 minutes. The next candle that's formed is also a flat top. This is quite strong now, it's coming down. Look, stochastic is bringing this down. It's bringing it down. Now, we need to now find out where this is going to bring it down to and is it worth getting into the trade. But before we do that, we've got one more indicator we're going to put on this just to make sure that this is the right trade for us. Now, the next indicator that we're going to put on is called a PSAR, or a parabolic stop and reverse. So we go up to our indicators and we type PSAR, parabolic SAR, that's that one. Okay, that's the one we want. And we're going to drop that on our chart. And as you can see, it's dropped these dots onto our chart. These are the parabolic stop and reverse dots. And this is what we look at before we take our BYOB. Now, these dots followed the trend down. So as you can see, the dots were on top as the trade came down. Now, look what happened. These parabolic SARs stopped, reversed underneath the candles, and they've brought it back up. They've stopped and reversed. That's why it's a parabolic stop and reverse. Like on here, the parabolic SARs were coming up. They stopped. They've reversed. They've brought it down. But it's not until this point here that they've stopped and reversed. Okay, so you had to wait. Even though this was in the extreme down here, you didn't get the stop and reverse until here, which is about here on the stochastic. So even though the stochastic isn't in the extreme at the moment, you get the parabolic SAR flip, it was in the extreme. It still counts. So even though when you look to this, okay, you'd maybe look at this and go, oh, we've stopped and reversed here. But the stochastic could have already been started to make its move up. As you can see, where the parabolic SAR is and the stochastic is, look how nice and strong that movement is coming up. You've got a gap between the red and the green. They're coming up towards this area here. You had a stop and reverse here. You had a flat bottom candles, and you could have taken that up, okay? So what we do is we tend to use our little ruler here, and we can measure from where the parabolic SAR flipped to the stochastic to the flat bottom candle. So if we start there, this movement up was 40 pips. It's a 40 pip move on that particular one, okay? Now we only want 10. We only want 10 pips for this strategy. So 10 pips was literally, you would have got in about here because you've had the parabolic SAR, you've had the stochastic, and you've got the candle in the right place. So 10 pips is about there. You only had to take that little move to have done your daily trade for the day, and you've got out. You've done. Okay, you don't even need all this lot. This is all added bonuses, but we only go for 10 pips because we like to play it safe. Because all the time that you're in a trade, you're in a risky situation because it could turn on you. So as soon as you get your 10 pips for the day, lock it in, get out, say thank you very much, done my target for the day, and move on. 10 pips a day will set you financially free. And you might see all these other marketers online, these traders who are flashing their screens with, oh, I got 120 pips today, I got 200 pips today. And all that does is give you a sense of, oh my God, I'm not a very good trader. I'm not getting all these hundreds of pips. Like, what am I doing wrong? And you get that fear of missing out and you feel like you're doing something wrong, but you are not. If you can get a 3% account growth every day, get with only 10 pips, you've done it. You've done it. What they don't tell you is when you're looking at all these marketers and they've got hundreds and hundreds of pips, they could have got 200 pips that day on a move. But they could have still had a 3% account growth because their lot size could have been really, really tiny, you know, to make up for the fact that their stop loss is so far away. But with this, you're going for 10 pips, but you're going for 3% growth. Now, what you tend to do is before you take a trade, you go to something called a position size calculator. This is on my FX book and it's a position calculator. What you do is you put in here the currency that you're trading it with, so whatever your currency is set up with your broker, your account size here, let's just say it's £10,000. Let's make that a little bit more realistic for new people. So £1,000, right? Say you had $1,000 in your trading account and you were going for 3% a day, okay, and you were going for 10 pips. What you do then is you put in the actual pair that you're trading with, so let's put Euro GBP and calculate. Now for your 10 pips a day, you could get $30 profit, okay? And it gives you your lot size, okay? So you'd want to put in a 0.24 lot size to get your 3% for the day with 10 pips. Now, I'll tell you what, this is really exciting about this. This is a mathematical formula, by the way. This, you know, it won't always happen this way. Now, let's just say you were looking at trading to replace your job. Okay, not everybody wants to do that. Some people say, you know, they just want a little bit extra money. Some people just want to build a retirement pot. You know, not everybody wants to replace their jobs. But let's just say you built up your trading account being sensible to 10,000, right? Would $300 a day return profit replace an income Someone's at my door. 2 seconds. Sorry. Sorry about that, everyone. I love couriers these days. They knock and run, don't they? They don't even hang around anymore. They just drop it on your doorstep. Wait sure you open the door and run off. But no, it's cool. I've got CCTV up in here and I can see when I was walking up my drive, so it's good. Right. So you don't need to be a trader with $1 million account to set yourself financially free. Let's just say you went for 10 pips a day, started with $100 and built your account up to 10,000, right? You could do that easily in a year. Okay, so every day when you went into the markets, if you could get 10 pips a day, 3% growth, that's $300 a day profit. So you could easily not build your account any bigger than 10,000. You could stay at 10,000 and you could pull out $300 a day. The next day, start back at 10,000 again. Would you be happy with that? Would that be all right? Would that be a nice little pension pot? Be very nice, wouldn't it? So don't think that you have to build up your account to like hundreds of thousands of pounds to be a very profitable trader. Because if that's all you ever want to live on, you just want to, just cover your bills, cover your mortgage, cover a pension, anything like that, whatever amount you put in here, let's say you had $5,000 account. Okay, $150 a day return. Not bad, eh? It's practically in a UK wage for the day, isn't it? So you could replace a UK wage just by building up your account size to $5,000 and get good at getting 10 pips a day. So all you need to do is master getting 10 pips a day. That is why we say 10 pips a day will set you financially free. If you stick to the rules, stick to your trading plan, get your 10 pips, walk away. Don't get your 10 pips and then think, right, I've got the 10 pips, I know, I'll double it today because I bet you anything you'll give it back to the market in the afternoon because it just seems to be sod's law that that's what's going to happen. 2 seconds. Shut that door. Keep the kids out. Right. Right. I'm just checking. We're due a concrete and cement delivery as well. And I bet you they turn up now rather than wait till I've been in all morning. But so far, that it's all clear out there. We're okay. Anyway, let's get back to this strategy, shall we? And the power of the BYOB and 10 pips a day. So we are only looking for 3 things to qualify this trade. Is the stochastic in the extreme? Yes. Do we have a flat topped candle for a sell? Yes. Has the PSAR flipped? Has it stopped and reversed?
Yeah.
Yes. So when that happens, what we tend to do on a 15-minute candle is wait a few minutes to make sure that that is definitely still coming down the right way. And then we would get into that trade for a sell. Let's say we got in up here. Okay, and we would take that down for our 10 pips. So that only needs to get to here, okay, for 10 pips profit. And we're done for the day, right? So what I tend to do then is to see, has this trade got enough room to move to get me 10 pips? Now, price moves in waves and it moves in kind of channels, and support and resistance is incredibly important. So one thing I tend to do is once all my 3 criteria are met, I tend to put some support and resistance lines on here. So you can draw on horizontal lines, and support and resistance is where the trade price seems to be respecting. So if I draw a line on there and look left a little bit, can you see how this trade has kind of respected this line? It's touched there, it's touched there. It's come back, touched, it's broken, but it's come back. Touched again, it's broken down, but look, it's come up and it's come back and it's touched this line twice here. This is a really important line of support and resistance. So I will be thinking to myself now, is this going to break this support and resistance or is it going to bounce off? I'm not sure. The fact that we've had a parabolic SAR flip and the fact that this is still quite strongly coming down, I think that this is going to break this line now. So where's the next line of resistance it could hit? There's another one about there. Okay, we've hit here, hit here, hit here. We've hit here, we've hovered around here. So if this now comes down to this level, which looks like it might, that is going to be pretty much 10 pips bang on. Okay, so I would think to myself, right, is there any news events that are going to cause this to be a problem today? Not at those particular times. There wasn't anything on Australian dollar or US dollar today around this time that could affect that. So that's looking good. We've had all three things line up, which is great. So then it comes down to how I feel about this trade. Do I like the look of this trade? Do I think that's going to come down or not? That's something that you just learn with the experience. But it all kind of lines up to look like a very good little trade. So because there is quite a tight channel here, because there's only like 10 pips it could possibly go to, I would then maybe think to myself, right, there's kind of another bit of a support and resistance line around about here. There's another one here, look. So that could only get to there. So my sort of very cautious trading brain would tell me that I would probably go for 5 pips on this one, take the 5, walk away, and maybe look for another one. Okay, so that's what I would do on that. But you've got to remember is that there is going to be so many trades for you to look at throughout the day. So don't feel pressured into looking and taking the first one that meets all 3 criterion lines up. Don't sort of go, oh my God, right, the stochastic's in the extreme, the peso's flipped, we've got a flat top, let's get in this trade right now. Because it might not be, even though those 3 things have happened, it still might not be the perfect trade. And you only need 1 trade a day or 2 5-pip trades, whatever you want to do, okay? But there is always going to be another trade. Let me just show you the vibrato tool, right? Look, these are coming through all the time. We had a call at 7 minutes ago, 2 at 7 minutes ago, 1 at 17 minutes ago, another one at 17 minutes ago, another one at 27 minutes ago. Trade ideas are coming in all the time. So please do not feel pressured that you have to take every trade if you're not 100% sure about it, okay? So don't ever kind of chase trades. Let the trades come to you. Find the perfect setup that you are 100% confident in, and that way, you know, you're going to be a very successful trader. It's all about discipline. Now, the other thing you need to look at as well is you need to put in what's called a stop loss on these trades. That is a level where you, if the trade turns against you, and say you're going to take this as a sell, right? Let's just remove these a minute. If this trade turned against you, let's just say you got into this trade right now, right? Let's put that into a blue color. Let's just say you got into this trade right now on this line, okay? You are going to have to, even though you're going for your 10 pips down here, let's just change that to green. That's where we want to get it to get to. Let's remove that one. Right, you got into this blue line. You want it to go down to this green line. That's your 10 pips. You are going to have to put a stop loss in on this trade. Now, a stop loss means if this trade suddenly turns for whatever reason and carries on going up, because there's a bit of an uptrend forming here. It's another little thing you need to look at, really. You know, there's a bit of an uptrend forming here. This could literally, this could come down, this could bounce off this trend line and can continue going up. Okay, this might not break this line. This could carry on going up. So if you decide to take this for a sell, you need to put somewhere where if it turns against you, you don't want it to get past, okay? You don't want it to keep going and get you in the red. So the actual rules of BYOB would be to put your stop loss where the peso flips, just above where the peso flipped, okay, which is up here. But then you need to look at the risk to reward on this. So if you won, you'd get 10 pips. But if this trade turns against you and lost, you would lose 23. So you could wipe out 2 days of trading on that particular stop loss. But you can also move your stop loss when you start to get into profit. Stop losses can be moved. You can go into your Mesh Trader 4 and change where your stop loss is. So as this goes into profit, okay, say you took this trade and it went, say, 3 pips into profit. If you really wanted to be sure that you were not going to lose this trade, what you could do is when you're in profit, you could get your stop loss and you could move it just 1 pip underneath where you got in. So if this came down, okay, and say it got to sort of 3 or 4 pips, yeah, and it turned against you, it would hit that stop loss and it would just, the trade would close. But the trade would close underneath the price you got in, giving you just 1 pip and then you're out. Okay, so all you've ever done is you've won 1 pip on that trade, right? Which isn't great, but it's better than that turning and you knocking you out for 23. It's all about managing it once you're in it, okay, and making sure that you're happy with that bigger stop loss or whatever it is where your PSARs are on that trade until you're in profit, and then move your stop loss. Or you don't have to go for your 10 pips. You could get to 6 pips. You could lock that amount of money in. You could lock your 6 pips in and just leave a tiny little bit of your lot size open and running. Go risk-free by moving your stop loss and just run it down to 10 pips as well. So there's all little things you can do to literally manage your trade once you're in it. But you really want to be looking for those criteria to be met before you took a trade. Now, I'm not going to recommend anybody get into this one at the moment, even though we had 3, because there is a big lot of support and resistance. There's a lot of noise around this area. And I'm worried that that's going to bounce off of the trend line and possibly go back up. So I would look for another one on that one. But like I said, there's trade ideas coming in all the time. So we've got Euro USD. Let's go and look at that one. Euro USD. Okay. So Euro USD. Okay, so for our BYOB then, is the stochastic in the extreme? Yep, look, it's been up in the extreme. It's literally, the blue went up in the extreme, the red slightly. So it's not as extreme as I would like, but it is in the extreme. Can you see down here how there is a black between the purple zone and the lines? But there's not much black here. So it's not as extreme as I'd like. But, you know, it could qualify. Do we have a flat topped candle for a sell? So is this candle ready to push down without a wick? Yes. Right, what haven't we got though? Can anyone see what's not there?
PSAR flip.
Exactly. We haven't had the stop and reverse. This PSAR hasn't stopped from supporting this trade going up and reversing to push it back down again. We haven't had that yet. So this one isn't ready. And if you think about it, if this candle came down to where this PSAR was, to flip it, that's 10 pips. It's got to come down to flip that, and then the candle will be here. And look, the candle then would be on this support and resistance level, making me think that there won't be much room for it to keep going down. So I would wait for that one. I'm not sure if that one's quite right yet. So we're going to have a look at another one. GP ORD. GP ORD. Okay. Is the stochastic in the extreme? Would you call that extreme?
No.
It's not, is it? Even though it's down the bottom of the purple zone, it hasn't come out of the purple zone. And look, it's snaking horizontally, which tells me that this is indecisive. This snaking means that this doesn't know what to do. And look at the wicks. Look at the wicks on this trade. Look how many there are. This is a very indecisive trade. And I'll tell you now that it's Great British Pound. Now, ever since the Brexit stuff kicked off, the Great British Pound has been incredibly volatile. So I tend to avoid trading it personally because it is very wicky, it's very volatile, and the slightest little thing changes the way that these candles move. So even though, you know, the Great British Pound is one of the major pairs, I don't tend to trade it very much because of this. Look, it's very wicky, very wicky. Let's look at some other pairs. Look, GP CAD, look at the wicks. None of these are good, strong candles on Great British Pound at the moment. GJ, look at this, right? I avoid GJ at the moment. I avoid most of the Great British pairs at the moment, unless you have got something very strong where this candle here has got a very strong body and a PSAR. But look, the stochastic was not in the extreme. So these pairs I would tend to avoid a little bit. Okay, so just be aware that GBP can be extremely volatile, and please be careful of it. Maybe use a lower lot size or a tighter stop loss when you're trading those pairs. So euro AUD we looked at. I won't go back too far. On 15-minute charts, I won't go back more than half an hour anyway to look. Just wait for the new ones to come in. AUD USD. And don't forget, you can get ideas from your harmonic scanner as well. If nothing's coming up on vibrator, either walk away, make a cup of tea and come back in another hour and have a look. Also be aware that the crossover periods of trading times as well. So you've got the New York session, the London sessions, all those sessions. Have a look at what sessions kind of are most working for you. I find that the London and the New York sessions are the best ones to trade in for me. So have a look at the time zones as well. You'll learn all that in your Forex Academy. So AUD USD, we had stochastic in the extreme. Yes. We had a PSAR flip and we've had a flat topped candle. Okay. Now that trade was called half an hour ago, which is about right because look, these are 15-minute candles. So we've had two 15-minute candles form since that was called. So when that was called out here, if we'd have just had that PSAR flip, then this could have been a good one to get into. But look where we are. Can you see the support and resistance line that this has hit? Okay, so that would make me nervous. What you want to find is when you've got a stochastic in the extreme, a flat top or flat bottom candle, and a PSAR flip with lots of room for it to go back up to a support resistance. That's what I look for. I look for when it's got a lot of room to move. When they're stuck on these kind of support resistance levels, it worries me that they could either bounce or break them, okay? And you're never really going to be 100% sure until it makes that move. So always look to make sure you've got enough room to profit in your BYOBs. Now, if you don't like scalp trading and you prefer like longer term trading and you want to set up a trade and leave it for the day, then you can do this exact same strategy on the bigger time frames. You could go to the hour candles. So every one of these is an hour. Okay, you could go to the 4-hour candles and look at your BYOB on the 4-hour. Now, this is a good example. AUD USD. If you'd have been trading on the 4-hour candles, you would have had stochastic in the extreme, you'd have had a PSAR flip and a flat topped candle. If you'd have traded the AUD USD on this big time frame 4-hour chart, set it up, say you went to bed, left it, when you woke up, that's moved 145 pips. So that is a really big move. They are bigger moves on the bigger time frames. You can get a lot more pips, but just remember, you don't need that many pips. You just need 10 pips a day. But if you was going to go for a big move like this, then put a really low lot size in so that your position isn't in so much risk, because if you left that at your normal lot size and it went the wrong way, you could lose 145 pips. So just be aware of that. But you can trade BYOB on the bigger time frames. So if you're a big day trader, every one of these represents a day. You could have a look, wait for these stochastics to be in the extreme on a day chart, wait for a PSAR, and you could get into this trade here on a day, walk away, don't look at it, right? Because if you look at this every day, you go crazy. See, there's 700 pip moves there, but that is over all of these days. Every one of these is a day. So if you've got the patience of a saint and you're willing to be in a trade for months and months and months, which some people do, then you can do this strategy on the bigger time frames as well. It works for every time frame. If you are super fast and you like, fast and furious, go down to the 1 minute. Scalp a couple of pips here, a couple of pips there, a couple of pips here, like that. But you could be waiting a long time on the 1 minute to get this to go in the extreme. It's an extreme down here, but that's why it sits comfortably for me personally at the 15-minute, but you need to find your own where you sit comfortably the most on these. Okay, let me just check. So I'm gonna have to jump off in a minute because David Kahn's coming on. Yeah, see Darren O'Kelly, GJ is his nemesis. I hate I don't hate it. I've got such a love-hate relationship with GJ. I have won a lot of money on GJ. I've also lost a lot of money on GJ, and it's one of those things that I don't know whether I love it or I hate it. I always go back to it to look because I remember the psychology of when I was winning a lot with it. But then it kicks in that remembrance of you also lost a lot of money on GJ. So I tend to avoid it at the moment because I'm trying to be really, really good and really disciplined. And that's what it comes down to when it comes to trading. You need to be disciplined. You need to have a trading plan, as Les said in his interview. You need to have the right mindset that you are going for your target every day, and once you hit your target you need to stop trading for that day. Don't give it back to the markets in another trade. If you are still itching to trade after you've got your target, then swap over to another account or a demo account just to keep your hand in and just to keep practicing and practicing and practicing. But on your real live accounts, set yourself a trading plan, set yourself a target, and just go for that every day on that real account. Everything else, do on demo. Everything else, practice, practice, practice. You know, blow a few accounts on demo. It's really good practice. But on your live trading accounts, please be disciplined. Please don't get greedy. Please play sensibly by putting in stop losses. But make sure your stop loss is in a position that you're happy if that's going to hit it. Because if you're not, then obviously that's too far away for you, so don't take that trade. So there we go. Right, 4 minutes till David Kahn and Sarah Hill. They are going to be on live very, very soon. And I think they'd look at the 25 for life strategy, which is a little bit of a longer term strategy, if you would like to look at that as well. But like I say, if you think BYOB is the one that you are liking the most, try not to look at anything else. And I'm serious, just look at BYOB. Because if you start wandering off and doing 25 for life and BYOB, the two strategies are completely different. They use different candles, different time frames. They look at Fibonacci levels, and it's so different, and it will mess you up. Don't do it.
It's very tempting. It's very tempting, isn't it, Sarah?
Oh, so tempting.
Especially when they're going on about 100 pips here and hundreds of pips here. You know,
you've got to remember that that could go the other way, and then it could be 100 pips out, and they don't tell you that bit. So just be sensible, and you know, if you do want to look at these other things, please maybe it's open up 2 different accounts with your broker. One for your BYOB where you focus just on that, and if you want to try 25 for life, maybe open up a different account for that. But keep a journal of everything you do. Keep a log of everything you do. I've got I made up these very basic little sheets that I keep up, and every day it's got the date, the time, the pair, whether it was a sell or a buy, what lot size I got into, where the signal came from, the stop loss size that I entered on, if I won or lost, and then I've got notes, and I write down next to it, you know, notes about it, what, you know, what went wrong, what went right, and then that way you can look back at your journal and go, right, well, that pair, I've lost every single time I've taken that pair, so let's just avoid that pair from now on. Or you can look at it and say, right, I seem to win most of my trades between 9 and 10 o'clock in the morning, but the trades that I take between 3 and 4 o'clock in the afternoon have all gone the wrong way. So maybe I should just trade between those hours. It really is. The more information you build up about your trading, the more and more precise trader you will be. But it's all about, I know everything's very exciting when you first start and you want to try this and that and the other thing. And we do encourage you on demo to try lots of different things. But when you think you found the one that suits you the most, just try to focus on that one thing. It's going to be hard because there's so many exciting things going on in our group. But please just try to be focused. And believe me, you will grow your accounts nice and steady, nice and safely, and you will set yourselves financially free. So anyway, with that said, happy trading, everybody. Go and get some lovely pips. Get your 10 pips for the day. And I'll see you on David Kahn's session very, very soon.
Thank you
Thanks
very much, Sarah. Thank you.
You're welcome. Thanks, everyone. Bye-bye.
Bye.